So you got investment on the brain. Maybe it's because you're lucky enough to have a steady job and you're looking to make your income grow somehow. Maybe it's because you just got that $1,400 stimulus check and you don't want to blow it all on a bar tab. Or maybe it's because your mom is always talking about how investing in property is so smart for someone your age, and you have that one friend who always brings up Bitcoin and GameStop. Maybe as a side, how should you invest? First off, PennLive is obviously not a certified financial planner, but we did do a little research on basic investment options that could be useful to you. So, without further ado, let me explain. Indexes. These are groups of stocks that you can buy that follow the financial growth of a wide variety of companies, from Amazon to Walmart. You can't actually invest in the Dow Jones or the S&P 500, but you can invest in an exchange-traded fund, or ETF, that follows the progress of these companies. For example, had you invested $1,000 in a fund that followed the S&P 500 in the year 2000, you would have seen it grow to $3,120 by 2020. And that's even with the 2008 financial crisis that tanked virtually everything. Dividends. These are individual stocks that pay you. Basically, companies give you some money each quarter based on the amount of shares you own. The more shares you own, the more cash you get. And you can take that cash and stick it in your bank account or reinvest it back into the market. At the end of the year, you pay Uncle Sam his cut, but it's typically less than what you'd pay in taxes at work. The key to this is choosing dividend companies with healthy financial records. So remember, choose wisely. Growth stocks. These are the riskiest bets. So-called growth companies deal in products or services with a lot of potential in the long term. Think e-commerce or even marijuana brands. However, there's also a great deal of risk because they tend to be less established. If this is the type of investment you'd like to go for, there are ETFs that compile a bunch of these growth stocks into a single investment so you don't have to pick the stocks yourself. If these companies succeed, you could become a millionaire. If they fail, well, you may have to watch that bar tab a little more carefully. Now, one more note of caution. You may be hearing a lot about meme stocks, which are companies that are all the rage on Reddit right now. This includes GameStop, that place in the mall where all the people who weren't cool enough to wear Abercrombie and Fitch, used to hang out in between hitting up Hot Topic. And some investors are trying to prop them back up again, but be careful, there's a reason why GameStop's revenue has dwindled. Putting your money into a failing company won't change those underlying reasons, and you could end up losing your shirt. Figuratively. Hopefully not literally. Please consider investing in PennLive with a like, a share, or a comment. And if you're feeling flush with cash, head over to PennLive.com where you can put some earnings towards a subscription for a no-risk investment in all the latest news. Thank you for watching.